Hi, everybody. It's Max here, Max Financial Services, your gun-friendly financial advisor. Today is Tuesday, October 22nd, the day past the Back to the Future day, and we're here with our markets update and economic update and discussion. Pretty exciting day today, actually. I was looking and preparing for this call yesterday, and I was going like, oh, well, it's going to be a flat week. The markets really didn't do anything. There really wasn't that much economic news. But we got our wish today. So the Dow was up about over 300 points. In percentage terms, it was the markets were up between 1.65 and 1.87%, which is actually quite good. Otherwise, without those days, the week was going to be pretty flat. No real key drivers for what's been happening with the market, but I mean, one of the things that you can actually think about is typically there's a saying, sell in May and go away, and then basically invest your money back in October. Well, we're in October, so we might actually have some drivers. What does it mean? We'll talk about a little bit later on. But over the last trading week, the S&P is up 1.87%. The Dow Jones is up 2.37%. So a pretty good week. For the year, we're actually still flat, flat to slightly down, obviously, after the big August sell-offs. Oil closed at $45.49 for West Texas Intermediate, which is the crude oil that we have here. And then the Brent crude, which is the European crude oil, that was up around $48 or so a barrel. Really what we've been seeing, we did see a test of 50, but it's been slowly coming off. I'm firmly in the camp that I think lower oil prices are going to be here to stay for a while. There's a surprising part, even though the stock market really had a pretty big roar today, the 10-year treasury is still at 2.03%, which is pretty much flat. So both treasuries and the stocks have been going up. It's crazy. It really shouldn't be. But once again, if you know me, I'm firmly in the camp that typically, I think with the way the economy is, I think we're still doing okay simply because of all the mass money that's been flooded into the system by the Federal Reserve. Longer term pressures, I believe, are actually towards the downside. I think rates can potentially go even lower. Keep in mind, about a year ago, the rates were only at the 10-year rate was at 1.5%. So right now we're at 2.03 after we hit a high of right around 265, 275, something along those lines. So that's good. Now, one of the things we might actually see is shorter term rates might come up, longer term rates might come down, which would mean we would have a flat or possibly an inverted yield curve, which is typically a big sure sign that we're going to have a recession coming up. But more on that later. As far as individual things that happen in stock market, so a couple of days ago, Ferrari, the race cars, they came out with their initial public offering. So the Fiat Group and a couple of the Ferrari owners, they put up about 5% of the total stock onto the market. They priced, I believe it was $52 a share, which was at the top of their range. And then when the shares became listed, they actually went up even more just because people were crazy and they wanted to get Ferrari stock. This really kind of goes back to the bigger point. I mean, people, I think, much like with GoPro IPO, I mean, Chipotle, Shake Shack, people just look at the stock and they think, well, because it's an initial public offering, it must be cheap. But meanwhile, what we're forgetting, particularly in times like right now, typically private equity groups and companies who are private, they will look to list their company on the public markets because they think they can get a high multiple. They think they can get a good deal for their stock. And they do. They list at the top of the ranges, and then the public markets go crazy, and then they price them even higher. With a stock like Ferrari, I mean, it's really interesting because they're already capacity constrained, and there is already almost a 1-year wait list to buy the cars. So the question is, well, how much more cars can they produce? One of the audio shows I was listening to yesterday, I believe it was on Bloomberg or CNBC, I don't recall. They're talking about that really where people see the key drivers and the demand drivers for Ferrari in the future is actually in Ferrari. And then I was just thinking about it. I was like, well, when I was in Las Vegas a week ago, one of the companies we're looking to do business with, they took us out to go racing race cars like Ferraris and Lamborghinis at Exotics Racing in Las Vegas. So thank you, Concord, and thank you, Jason Kavanaugh. Thank you. Enjoyed it very much. But there's basically a line of people who are lining up to go try to race a Ferrari. So Ferrari is a really huge brand. Forget the cars. I mean, just branding. It's awesome. If you go to the Wynn in Las Vegas, for now, you can have the Ferrari dealership, and most of the money that's basically made there is not on the cars. The money is actually made on buying all the Ferrari branded merchandise. So I think that's really where one of the key drivers can come from Ferrari, is expanding that lifestyle brand. Would I buy the stock personally? No, I think it's really silly and expensive, but I will probably write an article about the Ferrari, the stock, in one of the Seeking Alpha articles coming up soon. So we'll take a look. That's going to be on the calendar. The other interesting and exciting part, today, right after 4 o'clock, Google reported their earnings. And by all accounts, they beat expectations. They blew them out of the park. I'm sorry, not Google, Alphabet Incorporated, which is the new holdings company for Google. Couple of the stocks, both the shares of Google, since Google has two different share classes, they went up right around 9% after hours, after the announcement. So tomorrow is probably going to be a big pop. Two things for that. Number one, actually three things. They beat expectations. More so than that, they announced a big share buyback. So with part of the earnings that they're going to have, they're going to be buying back the stock, which basically, it's financial engineering, but at the end of the day, what it means, there's less stock available on the public markets. Thus, each share is going to be worth more. But the other really big thing that they did is, because they reorganized as Alphabet Incorporated, and Google is part of that, and all of the other, what they call moonshots, investors are getting significantly more clarity as to where the earnings are actually derived from Google. Before Google reorganized, everything which is kind of under Google, and Google did not really do a good job of explaining where the earnings and the drivers are coming from. Now that they have a new CFO, they're actually, and the new company structure, investors are much happier because there's significantly more transparency as to where the earnings are coming from, so you can actually see. And then for the Google side projects, we call them moonshots, you can see how much revenue is coming from there, any winners, any losers, or anything else along those lines. So that's on the Google side. Once again, I'm not a shareholder in either Google or Ferrari. And once again, none of it is an investment recommendation in either of the companies. Consult your financial professional for that. The bigger picture stuff. So as we talked about earlier, even though we've had a lot of ups and downs for the year, both the S&P and the Dow Jones were actually flat to slightly down for the year. So we had a lot of excitement. We broke new highs Q1, Q2. In August, we had a massive sell-off. We stabilized and we've recovered most of the way. However, we're still flat to down for the year. The real big test is going to come if the markets can break their highs, then we can have a continuation of the gains that we've had for the year. However, if they do not break those highs, if they challenge them, and we just fall back down, I'm concerned that the markets are just going to roll over and go down from that. Keep in mind, it doesn't typically happen that if the markets just keep going up, and then they drop, much like we had in August, the markets went up, they dropped, they recovered, they retested those lows, and then they came back up off of it. Right now, we came out of that plateau that we had in August, and we've recovered probably about 70% of the losses that we've had. But now really the next challenge is, are we going to break the highs that we've set earlier this year? I'm in the camp, just look, if you, I guess, zoom out and look at what's been happening in the momentum in the markets over the last couple of years. We've had highs on significantly lower momentum. So I'm concerned that we're probably at the top of the ninth in terms of the rally. I mean, there's some people who believe we're in the seventh inning or so, in the sixth or seventh. I think we're definitely at the top of the ninth. And once we test those highs, and if we break down below them, I believe that's definitely going to be a confirmation sign. It's going to be something to look forward to. For anybody who is a retiree, well, now would be a really good time to look at all of the gains that you've had over the last 7 years or so and see if it makes sense to lock some of those gains in. If you have new money just waiting to be deployed, well, take a look at your overall plans to see whether you're going to be comfortable taking on that risk. And go from there. So hopefully that was helpful. Our next blab is going to be next Tuesday. Is going to be our financial planning blab, and we're going to be discussing whether it makes sense to buy or to lease a car. One of the really interesting topics, something that I get very passionate about, I guess, when taking a look at and identifying what's going to be the best deal. In short, there is no bad answer. It's whether what's going to be the most appropriate for you or not. And then next Thursday, we're going to be doing, once again, our regularly scheduled market and economy update call from there. If you have any questions, feel free to reach out. You can leave your comments in here. You can send us an email. Once again, this replay is going to be available both on Blab. We're going to put it on YouTube, and it's going to be available on our website. So hopefully that was helpful. Thank you for joining us, and go from there. And I guess another reminder, for anybody who has questions about retirement planning, right on our website, we have put up new retirement planning tools that are accessible to everybody. So make sure you take your 5-minute retirement checkup at www.maxfs.com/retirement-checkup. All right. Thank you very much. Talk to you soon. Take care.